Hello, everyone, and welcome to the Smart Investor. Why smart? Because I'm here to educate you. And it's important for you to be educated right now. Why is it important to be educated? It is important to be educated because things are happening in the market. Several things are happening for you and to make money. One, what is the Fed doing? Two, what are the traders and the market itself going to do? Three, what is really going on in the market right now? I mean, yeah, the Fed lowered by 50 basis points. Does it mean that stocks are going to go up automatically? Let's find out a little bit more about the Fed. And join me as we dive deep into the world of the Federal Reserve and challenge the idea of whether it is truly controlled by politics. So first of all, let's just give me a second. Listen to me a little bit. This is going to be interesting. I'm going to teach you things that you never realized it was possible. But most importantly, I will show you how to benefit from it. So first, let us understand what is happening. Right? Let's take a look at this. Let's go back in time. Let's go back to the next 10 years. And let's see another Federal Reserve chairman. And let's see what the President Nixon says to him the day is inaugurated.
Support and defend the Constitution of the United States against all enemies.
The man who's now got the job of controlling the nation's money supply is Dr. Arthur Burns, the new chairman of the Federal Reserve Board. He takes over at a time when the business community is looking forward to a relaxation of financial restrictions. He's a personal friend of President Nixon, who went into...
What do they mean by that? Is they want the rates to go down, the interest rate. They want the Fed to lower rates. Now, keep in mind, presidents always want low rates. Why? Because if rates are low, it's easy to start a business. Nothing costs much money. The debt is very cheap, including the government debt. So it's a great combination and you want lower debt. But, if you lower debt too much, if you lower the interest rate too much, and the amount of inflation automatically will start to increase because business activity is going to pick up, speed up, rush up, and then what you end up having is inflation, and then we're back again to square one. So every single president want their Federal Reserve chairman to lower the rates. They won't say it. It's up to them. They do what they want. They hire the guy or the woman, but they can't fire them. Let's say what he says. Most interesting.
Links at Burns' inauguration to show his support.
You see, Dr. Burns, that's a standing vote of appreciation in advance for lower interest rates and more money.
Isn't that funny? He actually says it. I want lower rates. I want lower rates and more money. I don't care about inflation.
Ladies and gentlemen, as all of you know, the Federal Reserve is independent, certainly independent of the President, although the Congress...
Well, hold on. He actually says it, right? Like you hear it today. The Federal Reserve is independent. The Federal Reserve is independent. Although recently, when the Federal Reserve Chairman recently lowered the rates by 50 basis points, everybody was expecting 25 basis points. We were expecting 25 basis points. And yet we got 50. So we're saying, oh, so does it mean that you have fought off inflation or you're not concerned about recession? You do realize unemployment is going up. So why are you not so unconcerned about recession? Or is it that you are driven by something other than political thinking or influence?
Would suggest that it is not independent of the Congress. I respect that independence. On the other hand, I do have the...
That was a lie. History will show that this was a lie.
...as President to convey my views to the Chairman of the Federal Reserve in meetings of the Quadriad along with the Secretary of the Treasury and Chairman of the Council of Economic Advisors. I have some very strong views on some of these economic matters, and I can assure you that I will convey them privately and strongly to Dr. Burns in the meeting.
Privately and strongly. And guess what? The 80s, recession, inflation. Remember that the 60s saw a lot of inflation after Kennedy. And the reason you had that much inflation is because, there was the Vietnam War. So a lot of money was being spent. So that created lots and lots and lots of inflation. The same way that when we had COVID, we spent lots of money because of COVID, right? We gave people lots of money to spend. And guess what? When the economy opened up, bingo, huge amount of recession, huge amount of increase in the money supply, therefore inflation. And that's what happened in the 60s. So that's why he comes in and he says, it's time to lower, because they were raising the rates to fight inflation. Okay, it's time for us to stop this. Let's lower the inflation. Lower the inflation. We've done that. Lower the rates as well.
I respect his independence. However, I hope that independently he will conclude that my views are the ones that should be followed.
I mean, he says it. He literally says it, and people say, of course he's joking, because we all know that the Fed is independent. Let's come today. Let's introduce the role of the Federal Reserve in the U.S. economy, and let's set the stage for discussing the independence and political issues. So essentially, what the Fed is supposed to do is supposed to control the interest rate so that they control, basically they need to make sure the dollar is strong, and they also make sure that there's not too much unemployment, but right now their focus was on their inflation. Now they say inflation is taken care of, now we're just going to fight on unemployment, and that is the reason why I am lowering the rates. Although lots of people are saying, well, be careful lowering the rates too fast, because inflation is not out of the woods yet. So be careful. Watch what you're doing.
Larry, it's a sharply divided Fed. We had first dissent by a governor since 2005, and it looks to me like Jay Powell pushed this through pretty hard.
Oops. Now, of course, let's watch the channel that's actually saying that. But basically, it would appear that this dissent at the Fed for the first time since 2005, that means that someone wasn't interested, wanted 25 basis points, not 50, because they said, we are not done with inflation. They're not saying it, but let's remember, in the 70s, they thought they were done, and they were not, and inflation came back roaring.
He managed the market pricing so that he could walk into the meeting, tell the other governors, well, this is what the market's expecting. We shouldn't disappoint the market. And I agree with you. I think they should have started with a 25 and gone from there. And unless Jay Powell has a view on the economy that's not evident in the current data, this was...
What he means by that is that, does he thinks that there is a recession coming in? Meaning he has a view that the economy is not doing well, that's why he's doing 50 bips. But when we look at the data, there is no such evidence. I mean, we have a soft landing. We don't have a recession. So you should still be focusing on inflation rather than unless you're doing it to help someone else.
Too large. This is the first rate cut this close to an election in 75 years.
That's interesting. First cut in 75 years. So close to an election. You don't want to do that close to an election because you know it's volatile. Why are you doing it?
If you're trying to give the appearance of not being political, this was just the wrong thing to do.
Again, there's this topic coming back. This is not new. This is you're trying to be not political because obviously the Biden administration say thank you for that 50 bips.
You think, John Carney, I'm going to put this in the RIF when we publish the thing. But the fact is, why couldn't they have waited until the day after the election in November? Why do they have to do 50 48 days before the election is not going to matter. It's not going to impact the economy in the next month. They could have waited and therefore been totally non-political. Now I think they're going to be subject to some, fair amount of criticism. I don't know what Mr. Trump's going to say. I have a feeling he's not going to be happy with this.
Larry, they absolutely should have waited till November. There's no economic theory that tells you cutting in September will change the economic path of the country rather than waiting till the day after the election in November when they have their next.
I mean, rates takes months to take effect. Months. It's sometimes year. The same way all these rate cuts that we had last year and the year before are going to be impacting us pretty soon as well.
The other danger of this 50 basis point cut is what happens if Donald Trump is elected and they decide they want to do 25 in November. Guess what? It'll look like they pumped the economy for Kamala and then decided to stop being as unrestrictive when Donald Trump got elected. So they are actually locking themselves into a series of 50 basis points.
Now, let's remember one thing. I mean, what do you care what they meant to do it, what they not meant to do it? Well, it has a huge implication. It has a huge implication because if you're not independent and you're acting just on the bequest of the government, you are not doing what you should be doing for the economy. So if the economy right now if the inflation is not being beaten, and it hasn't, right? It has come down, but be careful. Remember what happened in the 80s. If you don't do the right thing and if you don't if you lower the rates too quickly, you may reignite inflation again because the economy seems to be doing well. So for you, it's going to impact you. Why? Because inflation is going to go back up again. Things are going to be more expensive, houses, and of course, it will impact the stock market. Yes.
And they don't even realize it. Powell said, this is no set path. Don't think that this is the new way forward. It is the new way forward, especially if Donald Trump wins in November, because they will not be able to say, oh, we thought big cuts were good under Kamala, but now we got to dial that back under Trump. That'll be politically explosive.
I mean, I was reading Committee to Unleash Prosperity Hotline, and they highlighted commodity index prices have come down about 15%. Long-term interest rates in the Treasury market have come down, although I think they went up.
What he means by that is commodities falls on declining economic outlook. Essentially, when oil, for example, which is a commodity, they tend to drop when economic activity starts to slow down, right? So that's what's happening right now, it would appear, that economic activities are slowing down.
Slightly. By the way, the stock market, I don't know, last time it didn't do that much. It was up slightly, not huge today. But I understand that.
The thing is, the market got its 50 basis points cut, but he didn't do anything on the day of the cut. The next day, he rolled back up, looked at a couple of options, did well on a couple of options in the morning, but then in the afternoon, it kind of fizzled back down again. To the point the next day, I figured, hey, maybe we should go buy some puts the next day because it doesn't look like this thing has any legs. Maybe the market is concerned about the recession.
And the unemployment rate has been creeping higher, so we'd all keep an eye on that. Again, that sounds like 25 basis points to me. On the other hand, the Atlanta Fed's GDP now is, I think, 3%. For the third quarter. The Fed's own target is 2% for growth. So no, it's just, there's just something about this that doesn't tie together. Maybe that's being reflected. You said there's disagreements among the FOMC members, and maybe because it doesn't tie together, and because Jay Powell may have jammed it through.
Well, I think he did jam it through. I mean, if you look at the dot plot, it's pretty clear for the rest of the year, two of the members do not want any other cuts. 7 want one more cut. So they would have obviously preferred 25 and moved at a measured pace. And look, Larry, I've studied a lot of financial history, and this is how we got the recursive inflation in the 60s and 70s. It was a fault-on spin.
This is exactly what I've been talking about when I show you the previous videos. That we were in exactly Exactly the same situation. This is important for you. This is important for you because if they get it wrong, the market is going to collapse. If they get it wrong, we might end up in a recession, right? So he's got to do what is right based on what we think is going to happen, but nothing tied to politics.
Kept going, which we likely see under Harris, as you just mentioned, and these regulations that they keep putting on top. When big government demand shock meets big regulation, you get big inflation. So I don't think the Fed should be declaring victory here.
So much of the GDP is government related. Now, government per se is a fair piece, but a lot of the consumer spending is government benefits flowing through to the economy. A lot of it going right into checking accounts. Now, again, the mistake the Fed made 3.5 years ago, basically, and made it for 2 solid years until they wised up, is that they're monetizing all the federal spending and the federal borrowing. They're monetizing it, okay? Now, I'm not saying they're doing that again altogether. It has the same feel, though. You have to worry about the late 60s and the 70s.
We go back to that again. Hopefully that doesn't happen because let me tell you, when we had inflation coming back, and then we had a recession, then we had a stock market crash. Do you know how many years it took for the market to come back? Do you know how many years it took? At least, I believe, 10 years for the market to go back in the 80s to what it lost in the 70s.
Scott Bessent just said. It just, I don't know, John, it doesn't hang together in my mind. I don't want to criticize the Fed just for the sake of criticizing it, but they could have gotten the same outcome with 25 basis points and people would not have accused them. This will politicize the Fed. I guarantee you this. I mean, I'm going to ask, we have a couple senators coming up on the show, Newt Gingrich. I want to find out what they all think about this.
There was also a warning that nobody has looked at yet in those Fed projections. They've been raising the long-term Fed funds rate every other meeting all year round. It was 2.5% for 4 years, from 2019 through 2023. It just went up to 2.9%. It was up at 2.8% back in March. They keep raising it up. It's going up. What does that tell you? That's telling you we have a bigger underlying inflation problem. That comes from the government overspending. So they are looking at this and they are saying we do have a spending problem. I think they think Kamala is going to win is part of the issue here. And they think that therefore the long-term rate to get inflation down to 2% has to be higher than they've ever thought for the last 4 years.
Scott Bessent, do you think the typical family, middle-class family, maybe a lower-income family, but working folks, do you think they would agree with the Fed that the Fed has conquered inflation?
So this is interesting. This is interesting because when we say inflation, we're looking at the CPI. And the CPI is basically a number that's being calculated based on a basket of goods and services. A bunch of things. But I am sure that your rent has gone up. I am sure that food has gone up. And it hasn't come down again. So you say, what do you mean what do you mean inflation is going down? Where did it go? Well, oil prices have gone down. Right? Salaries and a bunch of other items. But the one that matters to you most hasn't come down at all.
Well, Larry, if you look at the numbers, the University of Michigan consumer spending, the expectation for the lowest quartile, inflation expectations are twice as high as for the median. So the median inflation expectation is around 3.5. Because the lowest quartile, as you mentioned earlier, food, groceries, mortgage, insurance, their inflation experience has been very different. So they're anticipating 6 or 7% inflation because they have necessities. The other thing I would say, I think this cut, I've been saying for a while that I think we are in the U.S. in an emerging market style equilibrium. It's a bifurcated economy, and the Fed has goosed asset prices in the stock market, in housing.
Now remember, what he's basically bifurcated is saying, well, the poor don't have houses. They don't have that much money in the stock market. And those two assets are going up. Inflation impacts you differently. It impacts the middle to the lower class a lot harder because things cost more money to you. But obviously, when things cost more money, everything costs more money, including gold. Do you have gold in your portfolio? Including stocks, including housing. These go up a lot, but the other one are being pushed down. That's why the appeal of the Republicans, in terms of them attracting these people, they say, hey, what about me? What about me? And when he lowers the rates, what do you think that's going to do? That's going to push his pricing higher, right? Well, because the mortgage is going to be cheaper. House price isn't going to go up. The stock market supposedly is going to go up. Well, the little guy is saying, are you sure you're done with inflation? Because you seem to act like you're done with it. Are you sure? Because I'm not seeing it. Keep it up there. Keep it up to lower the prices.
10 or 20% are spending from the wealth effect. The bottom 50% for the past 2 years is getting crushed through inflation, through high interest rates, and through mass immigration.
Well, that raises another point, John Carney, and that the lower ends doesn't see any real inflation or price relief.
And we should know that Kudlow used to work for Trump at some point. Just saying.
The lower end, I think the lower end basically is very pessimistic. And I don't think that markets, as Scott said, look, 130 million people are in the market one way or another. The middle class is in the market, but in much smaller amounts. The lower income people.
Well, that's what I'm telling you. Poor to middle class to lower middle class are not in the stock market.
Not in the market very much, if at all. Now, if conditions were so tight, financial conditions were so tight, why are these, Dow Jones rising, S&P rising, the Magnificent Seven rising? I mean, as I learned it, I've been in and out of this for a long time. Tight money is antithetical to the stock market or even to the bond market.
I don't see any evidence that monetary policy is overly restrictive. We got the industrial.
Prior to today, we have to go back for just a bit of background. Remember that Greenspan, Sebastian Malady, wrote his biography and characterized Greenspan as being intimidated by the stock market. So every morning at 7:30 in the morning in the Eccles building, Greenspan had to have his daily stock market briefing on his desk.
So supposedly Greenspan, another Fed chairman, was supposed to be scared of the stock market.
And he never defied market pricing. He never shocked the markets, and he never went against when something had been full.
Because don't forget, in the morning of the 50 basis point cut, when I look at some of the surveys, it was more like 80%, 60%, 70% said 25 basis point. Nobody was expecting 50 because it was thought that 50 was too much, especially it would give the impression that there is a recession coming up.
Priced in. Jay Powell broke the mold today. He took us back to the days of Paul Volcker, who was infamously did not care about the financial markets, did not care about bankers and what they wanted and what their profit incentives were. Rather, he cared about monetary policy and making it correctly, as stated on the Fed's website, quote unquote, for the public good. And that's what Jay Powell did today. Prior to this, we had never seen the Fed raise or cut. Had the probability for doing so been below 79.8%. And that's actually a hard figure. And yet today we went into this meeting with about 59% probability priced in for a 50 basis point cut. Any of his three predecessors would have gone the way expected of the 95 out of 114 economists surveyed who said 25 basis points. Your friend and mine, George Goncalves, who will be at this dinner with us shortly, he was one of two big banks, including JP Morgan Chase, Michael Feroli over there, only two big banks calling for 50 basis point rate cut, which was the right thing to do, but they were in a tiny, tiny minority. And today, he's not as tall as Paul Volcker, but he stepped into his shoes, Jack, and he defied the markets. And I think that is absolutely exemplary on his part for having done so.
That's a very interesting perspective, Danielle. Thank you. And as you know, Fed Chair Jay Powell does not like to surprise markets. Every hike or pause or cut that I can remember has been one in which, as you say, The market knows what the Federal Reserve is going to do before it does it because it doesn't like a surprise. The fact that there was a chance, almost 50% chance that the market was cutting a 25 basis point cut, as well as 25 basis points being the dominant view up until very, very recently, does that indicate to you, Danielle, that there was a strong dissent at the Federal Reserve? There was a dissent, Governor Bowman, but that there was a strong battle between the doves and the hawks, and that this was not a unanimous
So there's discussion of the Fed again with these two folks talking, right? Something else is going on. This is the last thing you need between that. Although I will tell you, this is a good thing for us because that's going to increase volatility. I love it. I want that. Okay, and we could take advantage of that.
And Powell had a lot of difficulty in building that unanimous decision that he so likes to build.
You know, Jack, it was very apparent going into this. I was predicting that he would get a dissent one way or the other. But it was clear, Jack, that he was going to get more than one dissent if he only went 25, right? At the podium on July the 31st, he said that a real conversation had been had about cutting rates in July. So there was a contingency of Federal Open Market Committee members who were vociferously advocating for that first.
Correct. So here we are, folks. We have enough information for us to tell you that there is something going on at the Fed. The way they decided was they either went too much, too high, or they went too low. But that's okay. Why was this okay? Because I want the volatility. I wanted the volatility. So what happened on the day the market went down? The Fed cut rates. Well, first the market went like this and like that. Nothing happened. The next day it went up. Okay, fine. There was some pumped up willingness to make some money on that day. Okay, but then it went back down again. The next day kind of wobbled and went down again. So what's going on? How is that going to help you? This is the way it's going to help you is two ways. First, you need to understand that the Fed really wants to please the markets. That's one thing. Second, the fact that there's some issue, political issue, whether or not they're independent, is fantastic because it means that we are going to have volatility. You want that volatility. How you want the volatility? Because it allows you could play that volatility. You could play that volatility by buying calls and by buying puts at the same time. And you just wait. Bing, 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 bing. Simple as that. Now, if you don't understand options, that's okay. I will explain it. Join my Patreon channel so you can see exactly what the trades look like. Okay? Then, what you can also understand is because the Fed loves the market, the Fed does not want the stock market to go down. So the Fed is going to keep lowering the rates. Is it safe to lower the rates? Yes, it is safe. First of all, it doesn't look like we have a recession. So therefore, we are probably going to have a soft landing. Is it safe to lower the rates? Yes, because inflation is under control. It's been going down, hasn't it? So all this is pretty good news for you. It's good news because you are going to be able to make some money from this market. Now, this basically comes down to what I always said. You need to make sure you understand who the players are. We're not here to guess. We're not here to look for prediction. We're here to understand what the story is. Right? This is basically like the story of Frankenstein. I mean, what is the story of Frankenstein? It was a monster that's running around. Not really. That's not the real story of Frankenstein. It's a little much deeper. Otherwise, they would make 26 Frankenstein movies, right? It's got to be something a bit deeper than that. So your goal is to understand what's going on in the market, to understand the story that is being told to you. Once you understand the story, then you could make up your portfolio strategy. Then you could decide, should I be in the market? Should I not be in the market? You could make market as a recession as well. But right now, I think the story that we are being told is a story of volatility. It's a story of uncertainty. Why uncertainty? Because we have an election. Because the Fed might not be so independent after all. Because we potentially have some war in the Middle East. Because potentially we may have a recession, potentially more inflation. I don't know, but I could tell you that much. I could tell you that you should expect some volatility. I've been saying it over and over and over. And you need to understand what the volatility means. You need to understand that you cannot predict the stock market. Otherwise, it would have been done already. It wouldn't be spending this time. That's why finance is a quasi-science, not a science. It is, and that's the reason why it's so much more complicated, but it is also the reason why you can make lots of money in finance. If you know exactly what is a story they're telling you before putting you to bed. You need to understand that the stock market is like a child. It likes to be told a story. Your job is to understand what is that story. What is the story being told to the baby? Well, right now we'll tell you there are a bunch of stories being told at the same time. They're telling the baby about Santa Claus. They're telling the baby about Jack and the Beanstalk, and the Cat in the Hat. But all at the same time. They're telling the story all at the same time. So it's confusing to the child. The child is going to cry. The child is going to be happy one day. Market went up, and it's going to vomit. It vomited on August 5th. It vomited in the middle of August, and it's probably going to vomit again. Why? Do you realize there's lots and lots and lots of economic news coming out? Do you know what the market is going to do if for some reason employment starts going up? They're going to say, oh my God, even though he's lowering the rates, that's why I knew it. He has been lowering the rates because he thinks the stock market is going to crash. Once that story goes out, then it's all bets are off. And that's why you want to be hedged. Well, you can't diversify away the risk. Right? Diversification, better known as diversification by Warren Buffett, and he didn't do too bad for himself, right? Because you need to understand what you're buying. You don't need a lot of stocks or a lot of options to make money. No, you need to know what you're buying. You have to make sure you know what you're buying. You have to understand what you're buying. You need to know if you're buying for the credit reason, meaning for the long term, then you need to look at the financials. Take a look at some of the stocks that I have in my portfolio. I think if you look back at some of the videos, you could see them there. Or you could go to my Patreon channel and see the list. These are good stocks. These are stocks with some good prospects. With rates going down, you want to go into small caps. Definitely, that is the way to go. But if you don't want to go that route, if you want to go the route of taking advantage of the volatility, then you go for the options. But which options? Both. Long and short. So not to worry too much. I mean, you're not going to make money the same day, obviously. But you need to understand how they behave, regardless of what it is. You need to understand how the options behave. You need to understand how the stock behave. You need to understand what's going on with the stock. You need to understand the financial, but you also need to understand to make money, you take some risk. You need to understand the risk. If you don't understand the risk, that's going to be very difficult to make any kind of action. If you don't understand the story that is being told to the child, then it's going to be very difficult for you to take advantage of it. Because at the end of the day, the goal is to take advantage of the situation. The goal is not to predict the stock market. The goal is to take advantage of the situation. The goal when you go near a car is not to understand how the car works, right? The goal is to drive the car. The goal is to take advantage of the mechanics, to take advantage of the engineers, to take advantage of the salesperson that sold you the car so you could drive the car. Hopefully this is clear. This is simple, but this is important. Of course, you're going to say, but how do I know which story I'm being told? Because they're all telling you a different story. It's not what the story is being told to you, it's a story that's being told to the market and how the market is reacting. And right now, I fear that the market is waiting for the bad news. I hear the market is waiting for any kind of news about the recession. And if you have any kind of unemployment and payroll or whatever that is not good, bada bing, the stock market is going to crash. It's going to say, I want 50, except now, I want it now. Of course, Imagine you're Republicans, you're going to say, really? Come on. I mean, you're doing it because you're helping Kamala. No, I'm doing it because the stock market crashed. No. You know what I mean? So that's going to create even more confusion. This is a very, very, very contentious time period. But if you know that it is, if you understand it, you shouldn't be walking around saying, oh, the recession is fine. Or, you know what? I think we're going to have a recession. One, you're going to look like a lunatic. Two, it's going to look like you don't care. You need to be able to circumvent what's going on in the market, circumvent what they're all saying, understand what they're saying, understand the meaning, the big picture. Because at the end, the big picture is what? The big picture is that there's the rich and the poor, right? And inflation is hitting the poor more than the rich. Right? We had inflation. Stock market didn't do too bad. Pricing of house pricing is nuts. Talk about 40, 50% increase. How is that going to help you if you don't have a house? Right? So it's the people down there that say, Republicans, the people out there, Democrats, for whatever reason. I don't like his character. I don't like her because of what she said about this and that. It doesn't matter what they're saying. The point is two camps. And the same way those camps are being separated more and more and more, compared to historically, the more that's going to create contention. But that's okay because you don't care any of that. You're here to make money. Are you going to take money? You're going to take advantage. Remember I told you about the car? Take advantage of Ford, of all these people that spend all these years studying to build a car for you. Don't try to understand how it works. Do you think people understand how the stock market works? Do you really think how the market... Some people do, right? But they are working on complex algorithm that you couldn't possibly understand. So be smart. Don't follow that. Understand what they're telling you. Understand what they're telling the baby. And the baby is going to be crying pretty soon. Mark my words for that. The baby is going to be crying, and we're going to be crying with the baby. Because there's a lot of things happening, okay? So we've seen what happened historically with the Federal Reserve. We've seen historically that there is a point to be made that the Fed is not independent, even though everybody did independent. It's not independent. In fact, you're starting to see the cracks within because at the Federal Reserve, there are like 12 of them deciding whether or not it's a good time to buy, it's a good time to raise or not raise. Do you think they're making that purely for economic reason, not political? I mean, that's exactly what Yellen, the current Treasury Secretary, did just before she left. Get what? She raised the rates on Trump, basically. Not nice, right? She left, she raised the rates, and then when he lost and Biden was back, guess what? She was back in. I mean, not to take sides, but it's a very, very, a little bit too much convenient. So I would recommend highly that you pay attention, you listen to what's happening, you get a feel for what's happening, and most importantly, you need to understand who the players are. Okay? And I think if you do that, let me see if I have anything else for you. I mean, you've seen the shocking insight, right? On the current state of the Federal Reserve and its relationship with politics. That is pretty bad. So let us summarize the main points discussed. And I would like to encourage you to comment on what I've been talking about. For you to talk about it. Let me know what your feelings are. And then we could have a conversation online. Or you could simply go on my Patreon channel, all this good stuff. And don't forget to subscribe. And I will see you at the next video. Hopefully in the meantime, you make lots of money.